Record on. All right. Well, it's a couple of minutes before 7 o'clock. Welcome to the people watching this later on the video stream. I hit the record button, but we're a little bit early, so we'll give it a few minutes before we kick into the true Q&A. So people who are turning up on time don't miss out, I guess. So we did one of these, as you probably know, a week or so ago, and with 2 or 3 guys, and it went well. It was just, we didn't really know what we were going to do, but it just turned into asking questions, free form, and I will answer them to the best of my ability. Ideally, we want Tony to be here to answer all the questions, but I feel guilty asking Tony to take more of his time out to do this. So I could probably answer most of the questions. Anything I can't, I will write it down. I'll ask Tony, and then, we'll try and get him to do this once a month or something like that. I think we'll get him to pop in and do a guest appearance, wave the flag, do all that kind of stuff, answer the hard questions like, should we obey rule number 1 at all times? And he'll shoot himself in the head and say yes before he shoots himself in the head. Things like that.
Yes.
Only because we get asked that at least once a week by somebody.
It's probably the hardest thing to do, isn't it? So selling is always hard. So
yeah, people seem to find that. I mean, I've never found it hard. I'm always like, yeah, if things are going south, I want to get out in case it goes further south. But like we had to sell QHL this morning, and then it went back up again immediately after we sold it. And I'm like, shit.
Yeah.
But so you win some, you lose some, and you just keep moving. All works out in the end, as the big man says. All right, well, it is now 7 o'clock, so I think I can kick this off. Welcome, Tom. Welcome, Aidan. Welcome to anybody else who I haven't welcomed. Maybe it's a good practice if you're not talking, mute your microphones, I guess, so we don't get a lot of background noise. Introduction now that everyone's here, sort of first official formal outing, I guess, of this attempt at doing Zoom Q&As. We did do them. We have done them over the last couple of years where Tony's done them. You might have seen the videos on our website. But they were sort of just spontaneous and random. I've decided to try doing these more regularly, maybe weekly, mostly as a way of helping new people get up and running faster. Obviously you can submit your questions over email or go on the show or on Facebook or whatever. But, I think just an opportunity to have a roundtable chat once a week might be easier for some people. This microphone's not. I'll just put it up there. Can you still hear me if it's up there? Is that all right? Everyone hear me okay? Okay. So let's kick it off. I can answer anything and everything. So who wants to start it off? Nobody. Great. All right. Well, I will sit back and drink my whiskey then. And
I was wondering, now I've got a question. With trying to get just some of the metrics, just the board, how many shares they own without having a Stock Doctor subscription, where do you get that information? Is that from the annual report? Is that the only place, or are there websites that provide that? I've had a look around and I couldn't find anything on any websites. Did you know of anywhere else?
Yeah, well, way to go.
Just the annual report.
Way to go, starting it off with a tricky question there, right?
Did you have a look at Market Index?
Market Index. I'm not sure if I looked at that one, but I'll write that one down.
Write that one down.
Yeah,
because they have a lot of information.
Great.
If you don't have a Stock Doctor, that's a good one, Aidan. Yeah, the annual report would be my first step. I'd look in there, and then I haven't really gone to check Yahoo Finance to see if they carry it. Have you looked in Yahoo Finance? Did you find anything there?
I did look and I couldn't find it, but that doesn't mean it's not there. Yeah, I'm guessing. I actually haven't looked at any reports lately. It's one of the questions I had, but I haven't looked into much, with the exception of some websites. But so it's definitely in the annual report. So I'm guessing, yeah.
I think, they would have to report major they'll report major shareholders, but they may not list exactly who is a director or who's a member of the board. I don't really know. I haven't tried to do it for years outside of Stock Doctor, but I'm just bringing up Yahoo Finance. So
yeah, I'll have a look now myself. I'm fairly new to it, so I'm still getting around everything.
I'll have a look at a small cap like ZGL that I know is going to have a lot of holders. So they've got a tab here, holders, insider roster. Yeah, okay. So easy to find on Yahoo Finance. So go to the holders tab and then inside roster under that. You'll see a list of directors, chairmen, other executives that hold shares and how many shares they owned as of the last reporting. The problem then is, you'll need to grab that number, all those numbers, put them into a spreadsheet and figure out, the total share capital and figure out a percentage of how much they hold to see if it's greater than the 5 or 10% that we use as the benchmark these days. I can't remember which one it is. It's changed a couple of times. Anyone know? I think it's probably 5%, but don't quote me on that. Look it up. It's in the Bible anyway, what the cutoff is. So there's a bit of work involved, but I think you can do it by looking at Yahoo Finance. It's a bit easier than going through the annual report, I'm pretty sure. All right. Welcome, Annette, and anyone else who arrived that I didn't notice. Anyone got a question? I'm drinking Talisker Storm.
So much for doing
That was the question.
sessions, Cam.
Sorry, who was that? Somebody asked a question. Tom's frozen up.
G'day, Cam. I don't know if I'm freezing up.
Tom, yeah, you're freezing up.
Thanks. Okay.
But
Maybe if I turn off, is that better?
no, sadly.
Maybe you could put the question in the chat.
Yeah, you can put it in the chat window, Tom. Good idea, Aidan. While we're waiting for Tom, any other questions?
Yeah, I've got one for you, Cameron.
Yes.
Am I fading in and out, or am I okay?
Toby, no, you're good. Whoops.
Okay, good. Yeah, look, I'm new to this whole scene, and I've been, betting on shares over years and years, and came across you guys recently, which I was got into and joined up. So managed to navigate my way now into your stock filter and starting to get my head around all that sort of gear, which is quite enjoying. So I just from a rank outsider's point of view, just trying to understand. So when you look at the stock filter on the second tab of that spreadsheet there, you're looking at the quality scores, which I think come out of Stock Doctor, and then you've got the QAV scores. So the QAV scores, anything that's sitting at the top of that spreadsheet is virtually geared to be, your best sort of buys at any point of time.
Which version of the checklist are you looking at, Toby? The AF one or Tony's one?
QAV, AV one.
The AF one?
AF. I'm not
AF?
sure.
What, okay. And what's the name of the sheet? Have you renamed
QAV
it?
scorecard.
Oh, the scorecard. Okay, sorry, I'm with you. This is the one that we publish on a Monday. That's the one you're looking at?
Yeah.
Yeah, okay. Sorry, I'm with you now.
So
yes.
yeah, that was 26th of March, which was Monday, must have been.
Yeah.
So,
I'm just opening it up. So the quality score is actually something that we calculate. That's part of the QAV process. The QAV score gets calculated by taking all of the metrics, all of the data points that we measure and rounding up the scores, or adding up the scores, I mean. The QAV score is the final score that we come up with. That's the one that we stack rank on to buy. And yeah, so to answer your question, the way that we would normally buy stocks, whether we're starting from zero or if we've sold one and we have to replace it with another one, is we'll start at the top of the scorecard, stack ranked by QAV score, and we'll buy from the top down. But we have to check a couple of things before we do that. Number one, we have to make sure that the average daily trade for that stock is inside of our investing band.
Yeah.
You got your head around how that works yet?
Yeah, vaguely, yeah. So you've got like, the amount of shares that go through every day that you shouldn't, if you want to get out, you don't want to be holding any more than 20% of whatever.
20%, yeah. That's Tony's rule of thumb. Sometimes he will go up to 50, but that's only if he can't find anything to buy, which is common for Tony because of the amount of money that he's investing, and he's limited with the stocks that he can get into. So yeah, we'll check the average daily trade and make sure that it's high enough for the trade that we're wanting to do. And secondly, we want to check that the stock isn't a Josephine, because we don't run the buy list scorecard through a Josephine filter every week. We did do that for a while, and it just added, it added, sorry, do you know what a Josephine is?
I've sort of got my head around it, but for old guys like me, you might just give me a quick little brief overview.
Yeah, and for people watching it, so Josephine is just the name that we use for a stock whose current share price is below what its share price was at the end of the last calendar month.
Oh, okay. All right. Okay.
So in essence, it's trending downwards. It might be a buy, technically, it might be above its buy line and above its sell line.
Yeah.
But if its share price is trending downwards, we don't want to buy it, because a large component of Tony's system is appreciating the market sentiment for a stock, and if it's going backwards, he won't buy it until it turns around and starts to pick up again. So we call that a Josephine because I'm a Napoleon buff. I don't know if you can see the statues of Napoleon behind me there, but famously Napoleon supposedly said, "Not tonight, Josephine." So that's why I called it a Josephine. We want to make love to this stock, but just not tonight. We'll just have to wait. So we check those two things, and then if it passes those two things, we buy from the top down. Theory being that the stocks with the highest QAV score should deliver the best returns. Doesn't always work that way, obviously, but that's the theory.
So those numbers in 4J, 4I, they're all by 1,000.
Yes.
Yeah. All right. Cool. Okay. Thank you. Cool.
Thank you, Tom. No worries, Toby. Tom, did you want to type your message into the chat window, or do you think you got better?
Yeah, I think I've figured it out. Can you hear me okay?
Yeah, it's all good now.
Oh, great.
Turn the torrents downloads off in the background.
Nah, I'm not that gifted technically. First of all, thanks for doing this, and it's fantastic. So I really appreciate it. And look, my question was just in regards to I bought TGA and I made a mistake and I didn't realize the ex-dividend, and it went down and it breached my kind of 10% down trend. And I noticed that it's still quite high on the buy list, and I'm looking at buying something in the next week or two. And I do remember, I listen to the podcast when I go running, and sometimes I just can't remember, but buying a share you've already had, and whether or not, like, what's your approach to that?
So you've bought it and sold it, and now you're thinking about, okay. So this question comes up a lot. Tony's answer is always, it's never happened to him.
Yeah.
But if it did, he would buy it back, no problems. The reason though it normally never happens is because if you buy it and then you sell it, you're only selling it because its price has dropped.
Yeah.
Which usually means it's a Josephine.
Yeah.
And you wouldn't buy it. But in theory, it could drop and then turn around and come back up again and, you know, look good. So in which case, if it's at the top of the list, he would buy it. The only other thing I've heard him say in the past is that you have to be careful at the end of the financial year.
Yeah.
If you sell something to take a loss at the end of June, you buy back in early July, the ATO will frown upon that. So, but outside of the end of financial year, if it happens, Tony said he'd have no qualms buying it again.
Yeah, awesome.
What I have seen happen, a lot is in the 3 years we've been running the QAV portfolio, we will quite often buy stocks, sell them, buy them back a couple of months later or a month later sometimes.
Yeah.
Particularly that happened a lot around the GFC, the COVID cough a lot. We dumped a lot of stuff and then we bought it again a month later. But I haven't seen it happen in QAV outside of that.
And I think I've made a lot of rookie mistakes to begin with, which I'm learning so much. And it's good to know you've totally answered my question. So thank you.
It's fine. And look, you will do that. Like we all do that. I did that for a good year. Like I used to kick myself constantly where I'd buy stuff without checking something and then I'd sell stuff without checking it's a dividend. It's like, I don't know, that like when you have to buy or sell, the adrenaline kicks in. You're like, oh my God, I gotta do stuff. You know, it's
know. And when you see that big drop, like, you know, some of those big movers that, you know, I think with like, what was it? YAL or something like the week or so ago, it dropped, you know, 15%. And I was like, oh, I've got to get out. My mate at work who got me onto QAV was like, what are you doing?
Who was that, by the way?
What's that, sorry?
Who's your mate?
Oh, Mark Andrighetto. Yeah.
Oh, okay.
Yeah. Another QAV.
Yeah, well, you know, I had the same reaction when Yancoal dropped like that. But then, you know, fortunately, saw that it was paying out a massive dividend and special cash distribution, which bumped it up by like 70 cents a share. I had a look at it on Monday and it was, even though it was still down, I don't know, 10% from where we bought it. If you add the dividend and special cash back on, it was up by 10%. So, you know, if you factor all that in, but those sorts of trigger finger things, you'll make mistakes. And I know Tony, you know, Tony still screws stuff up, and it's like, it's just human nature, right? You're going to screw stuff up, particularly at the beginning. Marcus?
Thank you.
Hello.
Hey, mate. How are you?
Excellent. Thank you.
That's good.
I asked that question and I heard Tony answer it last week for reference for others. So two examples. One was ANZ that I had bought, it dropped more than 10%. I got out and now it's above my buy price. So ANZ is another example that's a continuous buy on the scorecard, but I got out. But I've also sold out of a couple of others that have gone down. So again, it's, you know, it's a law of averages. But what triggered my question was Macquarie, because I think I got in at 185, 186, and it dropped a couple. I think it got down to 179 or something. And Tony had mentioned it had gone below the 3-point sell line. So he was going to get out, and then, you know, it's gone back up. I did not sell, and hence why I raised the question, you know, should you have at least a 10% or more gap between your buy price and your own, and I would say that your own 3-point sell line, because when I had done it myself, you know, it was not a sell for me, and now it's back over 200 and I'm laughing, right? The methodology I'm finding fantastic of when to buy. So I'm sort of tick a box there, but I can foresee that the success for me and maybe for others is when to get out. And I do I'm still trying to find some consistency in the drawing of the 3-point cell line. And I do find I've got the breadilator, and I'm using that also as a check or validation. But I do find it time to time a bit ambiguous, whether we do a fudge or whether it's like, oh, it's too far back, or the gradient wasn't enough, so we're going to take the next bottom line and then we draw another cell line. So it's not a criticism, but I guess I'm very data driven, and I'm looking for something which is a bit more scientific. So it's just more for feedback and for others having difficulty on the cell line side.
Yeah. Yeah, I think we would all like something that was clearer. And that's part of the work Tony's been doing with Brett on the breadilator over the last year or so, is trying to code all of the scenarios that we see, so the breadilator can handle all of that. And eventually, you know, we want to have an app that just does it for us, but we need to get the coding kind of figured out. We need to work out the fundamentals of taking what's inside of Tony's head and turning it into code first.
Yeah, but after my Macquarie learning, for example, my own rule of thumb is that, you know, if it's good enough to buy, let me put it that way, then I would be using more of a rule 1 cell as my cell point, almost ignoring what the 3-point cell line is.
Okay.
So I would look to buy into it, but if it was only a 3% gap, I'm not going to sell out the first time it touches that 3% line, right? Because that can happen in a day.
Yeah. Well,
I don't know what other people think, but
do as you see fit. I mean,
yeah, sure.
You know, whatever works for you. Come back in a year and tell us how it worked out.
Yeah, we'll see how it goes.
I mean, my position is that, you know, Tony's been doing it for 30 years. This is what he has found that works best for him. I'm not smart enough to improve on it yet, so I'm just going to do what he tells me to do. But yeah, like, everyone's free to modify it and see how it works out.
I guess the other thing is that market conditions change. So what might work, you know, this month may not work next month. So you've got to be sort of, the whole idea of sort of rules is to be consistent, and you've got to be careful of them, because they might actually, if you vary them, you've got to look at the long-term position. So even though it might go well for 6 months, it may not go well over 5 years. So
well, that's why I asked the question to him, or, you know, via Cam, to say, would you buy into something if you've only got a 3% margin above the sell line?
Right. Yeah.
Well,
Well,
that was my Macquarie experience when I've just bought into it, and I'm like, fantastic, it's on the buy list. And a week later, you know, it's like, oh, it's hit the 3-point sell line, I'm getting out. And I'm like, shit, have I misread the graph or the rule book or the Bible?
I feel like the last few weeks have been so a bad time to start QAV, like in the last 2 to 3 months. Things are just going so up and down. It's timing.
Hey, you should have been here in March of 2020, man, during the COVID cough, when everything was, you know, the chickens were falling out of the sky. But, you know, Marcus, Tony and I bought Macquarie around about the same time and had to sell it as well. We both got in and we both got out exactly the same. I remember when we were buying it, people on the show were saying, you're crazy to buy Macquarie because it's like at an all-time high. It can't go any higher. And Tony was like, yeah, it can. So we bought it and it went above 200. Then it came back. We both sold it. It was a 3-point trend line sell for both of us. And then Tony said this week, I think it's back on the buy list again. So we'll probably both buy it again. Yeah, look, but it's one of those things that I think over time, you just get used to trading this stuff dispassionately and unemotionally. If the rules say to buy it, I buy it. If the rules say to sell it, I sell it. And I don't even really doesn't faze me at all anymore.
Can I ask just one more question and then I'll hand the floor? So back to that 3-point sell line, understanding it's a gradient and month by month, it should be on an increase.
Yeah.
Naturally, right? It's an upward gradient. So is the methodology to review the 3-point sell line price every month at the beginning of the following month and adjust what your sell-out point is?
Yeah, I do that the first Monday of every month, or the first workday of every month. One of my jobs is to review all of my sell alerts in Stock Doctor, which is a job, takes half an hour or more, but depending on how many stocks you're tracking. But you just, and sometimes they don't change much, sometimes they do, but it's just a good practice, I think, just to keep your eye on the ball with those things.
All right, thank you.
You're welcome. Who's next? Welcome, Evan, by the way, and everyone else who logged in lately.
Thank you.
Luke?
Actually, I just have a question about that. How do you, because even though I've been a member for a while, I haven't actually, haven't been really getting it. It's slowly sinking in. But how do you actually track that in Stock Doctor, the alerts that you have? Because they have their share price alerts. I always put it on my sell line for my rule 1. How do you then do it if you're if you're redoing it in the Bredelator and putting it on the sell? Because you want 2 alerts, don't you? How do you do that? You don't do it.
I do it. Yeah, no, I have. Have you seen their alert system?
Yeah.
So I have 2 alerts in there for every stock. I have a rule 1 alert and I have a 3-point trend line sell alert.
Okay.
And I also have alerts.
I haven't figured out how to do the 3-point trend line alert yet, but anyway,
I can show you. Let me do a share screen and show you how to do it, because that's pretty important. I'll just bring up Stock Doctor and I will share my screen. Can all see that?
Yeah.
I'll be in that window. Don't know why I'm in that window. Tools, Alert Manager. So you go to create new alert. We'll say BSL, price alerts, fixed price alert, price is less than $2.70. I'll tell myself this is a rule 1 or a 3 PTL, and click that, and that's it. Hit save.
Yeah, but what if you want the 2 alerts? For a rule 1 is not going to be the same price as the 3-point trend line, is it?
No, so it's 2 separate alerts. So then I do that again. I do that. I create 1 alert for the 3-point trend line and a separate alert for the rule 1.
Okay. Yeah. So you have to put it in twice. All right. I understand that.
Yeah. It's a bit annoying that you can't do it at once, but that's the way it works. And then I also check all of these as well.
Yeah.
Notification alerts for latest financials, price sensitive announcements. Downside of that is I get a lot more alerts than I need, but it's good because it gets me into the practice of just checking announcements when they're coming out and keeping an eye on the stocks and that kind of stuff. But yeah, you have to set up 2 separate alerts.
Yeah.
Can I ask, Annette, why would you have 2 different sell price alerts?
Well,
just to ask.
Well, for your situation, you would want an alert for the 3-point trend line rather than your rule 1, wouldn't you? Because you bought it just 3% off. Yeah.
I guess that's my point. For me, logically, you would only ever have 1 sell price alert.
Yeah.
I'm not sure why you would have two, like one at 100 and one at 98.
Because
Mm.
one's going to be higher than the other, right? So
Correct,
it's going to trip
yeah.
one first.
As soon as you trip the one, then you sell out, in theory.
Yeah.
I tell you the reason I do it is just for because what I found is I used to just put in like the rule 1 alert, and then it would go way above that. And when I'm going in every month and I'm scrolling through my list of alerts, there isn't a 3-point trend line alert for that. And over time, like a month, 6 months later, that 3-point trend line trigger is going to be higher than my original rule 1 trigger. But if it's not in there, I don't remember to update it. I could go back and look at all my portfolio stocks and then come back and compare it to my alerts. But if I just set them up when I buy the stock, they're in there, and then I can just update them every month. Every month I just go and update the 3-point trend line alerts because they're the ones that need to be updated. So it's in the system, and I don't need to rethink it, think about it. It's just it's a safety mechanism for me. That's the only reason I do it.
And do you think 1 month is adequate, or it should be done more? You know, at the moment, you know, I'm getting invested and I'm nervous, so I'm watching things a lot more than Tony seems to do. So yeah, do you think 1 month is okay, or should it be done more frequently? Tony
says he does it monthly, but you know, do it as often as you feel like you need to do it to be able to sleep at night.
Yeah, I suppose conversely, I was also thinking, you know, I've done okay on a couple of stocks and they're up 30%. I can't remember which one it is. And my innate sense is take the money and run, sell it out. But that's not what I'm supposed to do, is it? Just keep it.
Yeah, because you never know. It could go up another 100%. And, you know, if you look back over Tony's results over 30 years, I don't know if you've heard the episodes where he breaks down, you know, his annual returns. Some are very high and some are average and some are low, like below the All Ords or the, you know, the ASX 200, whatever his benchmark is. So when you break it down, a lot of his success in terms of his, you know, average return comes down to a couple of years. There's a really good year once every 10 years, 7 to 10 years, where he just blows up, right? And then inside his portfolio, there will be a couple of stocks that will really blow up. The 10 or 20% of the stocks that will do 100%, 200%, 300% over the course of a year or two, that really, you know, pushes returns right up. And then you'll have a bunch of 30s and 50s and whatever, and a couple of, you know, losers as well. So you really want to be in there for the good years and the good stocks that go all the way up. If you take your money and run, I think the fear is that you're going to miss out on that stock that looks good at 30. Like the analogy he always uses is like Apple or Tesla or something like that, which are extreme examples, obviously. But, you know, I think Apple floated at $6. If you'd got out when it hit 100, you would have thought you'd done very well. But, you know, if you take into account stock splits and all that kind of stuff, it's probably $1,000 a share now. So obviously those stocks, particularly in the Australian market, and keep, you know, we don't invest in tech stocks, so those stocks come along rarely. But I was looking the other day at yesterday or the day before, at the QAV portfolio results over the 3 years we've been running it, or 2.5 years really. You know, GRR, I think we've made 300% on GRR over 2.5 years. That was in 2 stints. We bought it, we sold it during the COVID cough, I think, or maybe probably during the iron ore collapse. And then we bought it back and it shot up again. But the first time that we owned GRR and FMG, I think went up 200%. GRR went up 200%. I mean, it was insane, but it happens. You know, that was part of the whole iron ore boom and all that kind of stuff. But, you know, when Tony goes over his, you know, his logs, his records over 30 years, those things happen. Like he gets a couple of stocks a year that'll just blow up, and a year once a decade that blows up. And that's what makes the difference between getting, I think, 12% on average and 19.5% on average, is just that, you know, the rules that he's applied in terms of always being invested and letting his winners run and not taking the profits, which is human nature. And, you know, we've had a lot of guests on the show, and successful investors, none of them have Tony's returns, but successful nonetheless. And they almost always talk about rebalancing. They take their profits and then they buy something else. And so I think if it's the couple of things that I've picked up anyway, I think that Tony does that no one else we've spoken to does. I'm sure there are other people out there who do this, but no one else we've spoken to anyway or come across, is he doesn't rebalance, he doesn't diversify, and he allows market sentiment to guide his thinking about when to buy and when to sell. And he doesn't just, he's not bloody minded about, well, I've done the analysis on this and I've determined that it's undervalued, and therefore I'm just going to buy in at any price and I'm going to hold it forever regardless of what happens, because that's what a real value investor does. Tony's like, yeah, fundamentals are strong, but if the market's dumping it, I'm not going to be the captain of the Titanic here, right? I could put my money somewhere else. He's very practical about, he wants his money to be working for him, regardless of whether or not he likes the company or not. He's like, cut and run and buy something else, right? I think those are the things I've picked up on that seem to set his system apart from what other value investors do. And I think that's why his results are consistently better than anyone else we've spoken to. And they're all really smart guys and successful investors, and I'm not taking anything away from them, but there's those couple of tweaks that he's put in seem to really make 5% per annum difference, I think, because the other guys get 12 to 15%. I think Tobias Carlyle I'm thinking of, and the guy whose book I've got up here somewhere, I can't remember. Who's the guy with the book?
The American?
Yeah, the American guy.
That was a very good interview. Excellent interview.
Thanks. Yeah, he's my backup if Tony ever quits. He's my backup guy. Can't remember his name now, but yeah, like I think he gets like 15%, 16%, something like that, which is not to be sneezed at.
The other thing about Tony is he doesn't need to sell because he doesn't need income. So, you know, he's just been gradually building, hasn't he? I mean, that's really the a key thing as well. He's been able to stay fully invested and not take anything out. And that's for many of us, that's not the case. So for most investors, that's not the case.
Yeah, no, that's absolutely right. I mean, I think the guys I'm talking about, Tobias Carlyle and the author of the book, are probably in a similar situation. But yeah, for most of us who are building our portfolios, that's not the case. Certainly not for me.
First, I'll credit just a sort of statement that's one of the other factors that he's, you know, that helps a fair bit. You know, in the well, not necessarily a fair bit, but it helps. And that's always an issue if you're going along and you sort of say, well, it's doubled. What do I do? You know, it's quite common for an investor to go, well, I'm going to sell half so that I'm always going to be ahead. So when it's doubled, I'll sell half and therefore I'm never going to lose money on the stock.
Yeah.
So now implicitly you are halving your return of strong growth companies by doing that.
Yeah.
But it's sort of like, well, you know, I've got to put food on the table too. So it's a sort of, it's a risk reward issue.
Well, if you're relying on the capital that you're investing to live on, yeah, that's definitely true. But if you're only investing money that you're prepared to invest for the long term, then you know you don't have to worry about that, unless you know you are of a mind where you want to take your profits for security purposes. But I think you know the other thing that you know once you've got some time under your belt as a QAV investor that makes a difference is you know you don't worry that you're going to lose money, because you know the system is designed in such a way that you're not going to lose money. At the very most, you're going to lose 10% on a stock. If you're waiting for it to go down to the 3PTL and it's a low 3PTL, it might go down a bit lower. But again, Tony's experience is that never happens. I mean, it always, something happens. You sell it for one bad news sell, or, you know, or a commodity sell, or it turns around and goes back up. So, you know, the system is designed in a way to make sure you don't lose money. And so, you know, if you trust the system, which I think for me probably took 6 months to a year of spending real money in it to the point, I mean, I trusted it before that because I trusted Tony. I trusted that the system would work. I didn't really trust myself to be able to apply it successfully. But after you've done it for 6 months to a year, you go, it works. Like I don't need to question it. I don't need to worry about it. I just follow the steps to the best of my ability, and the mechanisms take care of the rest, you know.
And Tony doesn't take dividends out. You're reinvesting dividends?
No, Tony does take dividends,
okay,
because he uses the dividends to pay for costs, pays tax bill, pays accounting, legal fees, that kind of stuff.
Okay. Right.
Can I ask a quick question? I'm cheeky and jumping in again. But sometimes I do like a download from Stock Doctor, and I use Andrew Flickman's Excel. Awesome. I notice that sometimes, and I try and do it myself, and I spend a few hours doing it. I'm a learner, and I make my buy list, and it's so different to the buy list that you publish each week. And I'm assuming that's just because the prices vary between when you published yours and when I've done mine. Is that why I might be seeing it in a different order, pending that I've done it correct?
What's the time gap between when we publish it and when you do it?
Usually a few days.
Shouldn't make a huge difference. I mean, it would be very unusual for a share price to change dramatically in a few days.
There's a few that are like
happen.
Maybe 3 or 4 places out, and I'm thinking maybe I've done something wrong. Like I've done something different. I don't know. Maybe that's my error. So it'd be good I'll go back and have a look.
Yeah, well, the first place to look is the manual data tab.
Yeah, have a look at the manual. Tom, I think that the manual would be where the variation is.
Awesome.
Yeah,
thanks.
I mean, because everything else is based on Stock Doctor data, which should be exactly the same unless you've screwed up your filters or something like that. But yeah, more often than not, it's going to be the way that you've read the manual data may be different to the way that we read it. That's the sentiment charts and qualified audits. Qualified audits sometimes it's up for subjective.
They're so hard to find.
Yeah, and I still am never quite sure what I'm reading with those. Every time I have to go back to the text in the Bible that we got from when we had Jamie. I
know who you're talking about.
The Naked Chef. What's the Naked Chef's name? Jamie
Oliver.
Jamie Oliver. Thank you. With Jamie Oliver. When Jamie Oliver was on and took us through it, I have to go back and literally read his words so I can try and remember what the hell I'm looking for. But yeah, the manual data is, like whether particularly if it's a new 3-point upturn and stuff like that. Like that, that's a couple of points that can make a big difference in the final score.
Actually, with Andrew Flickman's model, he was talking about a way to when you actually do the Stock Doctor download, was to update the share price. Have you done that? I mean, I can do that, but then if I go back 1 or 2 days later, I can't refresh that share price. If anyone's got some ideas on how to do that.
Sorry, can you say that again, Annette? I didn't follow.
Okay, Andrew Flickman said, and I think it was on Facebook, that with his model, he's worked out a way how if you do a download on one day and you go back to it in 1 or 2 days, you can actually update the share price by using something in Excel, which will actually update it. I'm new to Excel, so I don't actually know all about it. I've managed to do that, but you should be then able to refresh that share price in Excel. I haven't worked out how to do that.
I didn't see that post. I missed that. It sounds like he's using the stock history plugin in Excel, which pulls down live data from Microsoft or from Refinitiv.
Yeah.
Okay.
Yeah. So it's actually easy to do, but it must be easy to refresh it. And I actually haven't just found out how to do that.
Well, every time you open the spreadsheet, it should ask if you want to update it. It pulls up a little pop-up box saying, this contains live data. Should I update? You hit update and it will do it. No?
No.
I use it. In my spreadsheet, I have some stuff where I use stock history, and we've been building it. We're trying to create an Excel version of the Brettolator. Gary Martin and Brett have done a lot of work on that. Gary's a Queensland member, and it uses stock history. The problem is that stock history is actually missing a lot of data. So
but if you do that download using his his spreadsheets, if you want to then go back to it after a day or two, there must be an easy way rather than to download the whole thing again. I don't know. Maybe I might just ask him.
But doing the download only takes 10 seconds. I mean, why wouldn't you just do the download again and drop it in again? I mean, it's really a 1 minute process.
Copy all the Stock Doctor stuff, and might take you.
It takes me 1 minute, but yeah.
Oh, really? Okay.
Select, copy, paste. I mean,
yeah.
But no, look, I'll look up the.
I think you can do it if you use Google Sheets.
Yeah, but the checklist
Google Sheets will update automatically.
Yeah, but it's in Excel.
Yeah.
Yeah.
Yeah. The spreadsheet doesn't work on Google Sheets unless you convert it over. When did Andrew post that, Annette? I missed it.
Oh God, I don't know. It was quite a while ago.
I'll ask him.
And I was amazed. I actually did get it to work, and then haven't been able to refresh it.
Okay, I'll ask Andrew about that.
It might be the Excel that I'm using because it's 365. Maybe I don't know. Maybe it's different to his. I don't know.
I think you need 365 to use stock history. You need a monthly subscription 365 version to use stock history, I believe.
Yeah, well, I'm not really au fait with Excel, so I'm still learning.
The other thing, Annette, is to go to YouTube. There's lots of nice little short YouTube Excel stock history type videos as well. Yeah. That type, when you've got something like that, it's very YouTube's very good. If you know if you've got a specific thing that you're trying to solve, YouTube is very good on IT things. Okay.
All right, I'll try that.
Or ask Andrew, but I think there's a certain satisfaction by going, actually, let me just have a quick look at a 3-minute video, because you probably learn, it will cover off some things for you that you may also not know. So
I have been doing a bit of that.
Yeah, okay.
Annette, if you're trying to adjust the stock price, are you trying to refresh with the most current stock price only?
Yeah. So what I do is I download Andrew's sheets, put all the Stock Doctor stuff in there, and then I might leave it for a day or two, and the stock's, it's moved. So the QAV score is not going to be the same. So then, it's I'm not finding it easy to do. There's probably something really easy that you can do to refresh that. And I'm not as quick as Cameron, obviously.
I'm not quick. It just does it automatically for me. I don't know why it's not doing it automatically for you, but we can find out. Why don't you send me your sheet to have a look at, Annette? Email it to me and I'll see if I can work it out too. But I'll also ask Andrew.
But what I'm saying is I'm actually doing the Stock Doctor download again to put it into the sheet.
As opposed to just using the update.
And then adding the stock history from Excel, and then going back to that original sheet after a day or two, and the stock price has changed.
Yeah, I'm with you.
But it doesn't on the sheet. Anyway, I'll work it out.
Email it to me and I'll have a look. See if I can debug it for you.
Okay.
That was the other book that you were talking about a second ago.
That's it.
Yeah, that's it. Well,
what's his name?
It's mirrored. David Waldron.
That's it, David Waldron. Thank you.
I mirrored. I just realised that's the impact. I thought, I like this. I like when you have your right hand you mirror, but it's not good when you hold up writing, right? So,
yeah, right. Yeah, he sent us autographed copies of it, which is nice. Must be down in my other bookshelf in the garage.
I think he really liked you guys. Right?
Everyone likes us, Jeff, except the tech investor guys that we've had on, and they didn't like us so much. And Alan Kohler, but he did agree to have lunch with us in Melbourne later on, but then COVID hit, we couldn't do it. But
he gave you a great promo, great
that was he did. He did, but that was before he came on the show, and Tony asked him questions that I don't think he really wanted to be asked. And I said to Tony afterwards, man, you can't upset the guests like that. You have to be nice to the guests. You have to be gentle with the guests.
I didn't see that, so I'll have to go back.
Oh, it was a couple of years ago.
Right, he's a very he has the ability to influence stocks more so than any commentator. Right.
And Tony's a big fan of his, has been a subscriber to his newsletter for decades. And Tony disagreed with him when Alan said, this time it's different, Tony. It's always different. Yeah, it's different, Tony.
Yeah, that's right.
Tony was like, I don't think it's different.
The very difficult thing, I've been subscribing to the Eureka report since it started. And it's really not. Some people write better than their podcasts.
Yeah.
So one of the things I found is, and I'm not saying Alan's not capable. He certainly is capable, but you realize what they don't know.
Yeah.
When you're on a live, you go, my God, don't you know that? Right? And because you expect them to know these things and they don't. So but they obviously know a whole lot of other stuff. So anyway, that's my sort of. It's very telling. It's a very tough environment to be doing live interviews, and especially if you're answering questions. From as he does on Eureka Cafe type stuff, as he has done for many years. And you go, for God's sake, get someone on who knows about that, as opposed to off the cuff making answers which are just wrong, So anyway, there's enough. I think there's enough people who listen to him that very politely tell him, "Look, Alan, that was wrong," and he's very good at correcting. I give him full credit, and he doesn't hide away from the fact, oh, I know we told you 2 weeks ago to do that, this was how it worked, but in actual fact, it's not. He's
Oh, that's good.
Yeah, it's
I think the most surprising thing for Tony when we had Alan on the show was when Tony asked Alan about Alan's own investing strategy and portfolio and history, and found out that Alan actually doesn't invest. He's not an investor. He said
I thought that was incredible. I just couldn't believe that.
Neither could Tony. You can almost hear his jaw hit the floor with that. Oh, I've been listening to you for 30 years and you don't actually invest your own money in this stuff you're saying is a good investment. Or, he probably doesn't say that, but the companies he's, talking to. Yeah, no, he just said he has a couple of stocks, but he's not really an investor. And we were like, holy crap, that's... the
real estate agent who rents their own home.
Yeah. Well, look, I think Alan's done very well out of his various business interests, but you would think a guy who talks about this stuff for a living would actually be an active investor. The fact that he wasn't was very surprising.
Can I ask a question about tracking your return? And I saw the Facebook post. You were saying a recalculation there. I think you had not been including your losses as one factor.
Closed positions in general.
Closed positions, yeah. And you were adding back in dividends, reinvest.
Not adding them in, yeah.
Not adding, yeah. I'm using Stock Doctor, and they're like what you showed before to track my own portfolio. But I note on the site and what comes out with the weekly post, it's coming out of Navexa, I think. Any pros and cons with one over the other? I assume you'd be getting the same result, or? No,
well, the reason I use Navexa is because I wanted a platform where I could just have an embedded plugin of our trades and our chart on our website, so I didn't need to keep updating it every week with a screenshot. And Stock Doctor wouldn't let me do that. ShareSite, when we interviewed the CEO of ShareSite, he said they could let us do that, and then it turned out they couldn't do that. And the Navexa guys said, oh yeah, we'll build that functionality in for you so you can do it. So that's the only reason we use Navexa. The main problem across all three of them, though, is none of them would give us a CAGR report. And so Navexa
what's a CAGR report?
Oh, that's all right. And so Tony's preferred way of calculating returns is compound annual growth return, CAGR, pronounced CAGR. We pronounce it CAGR anyway. It's just a very simple standard way of calculating your annual growth. All the platforms use something that apparently, according to Navarre at Navexa, is the industry standard, which is quite complicated. And Tony didn't like the results that it was spitting out. And neither does Stephen Mabb, by the way, who's one of our club members, longtime club member, and now the president of the Australian Shareholders Association. He didn't like it either. So, we put, not pressure, but we kept bugging the Navexa guys to give us CAGR reporting, which they've now done. And yeah, when I turned that on, I realized that I didn't have, at some point, I unchecked including closed positions. Yeah, which made a big result, a big difference in our financial year returns.
So if we look at what's on the QAV site today, which refreshes, as you said, for transparency, that's showing 26% today.
Well, that's the since inception number. That's still
well that's right. But on a CAGR basis, that would be over 2.5 years, 9%, I assume.
No,
because it's 2.5 years. I mean, if you're compounding at 20%, your overall return would be closer to 50%.
It is 50%. Yeah, we started with 20,000 in the portfolio. We're over 31,000 now. So it is 50% over 2.5 years in terms of real return on the portfolio.
So 20 was the starting number. Okay.
20,000, give or take, maybe 20,000 and I don't know, $90 or something like that. Yeah. So yeah, the graph on the website should be up to date, CAGR, and include closed positions, because that's what the portfolio setting is set to. So it's just showing the live result. David asked in the chat window, where on the website can I find what the portfolio is bought and when? Just go to the portfolio and checklist page, David. If you go to the website, up in the menu bar, it's like checklist and portfolio, or portfolio and checklist, something like that it's called. Click on that. Inside there's two embeds. One is the chart, and below that, if you scroll down, is not very usable, but there's like a table with all of the trades. See you, Aidan. Thanks for joining us. Yeah, there's a table there with all of the transactions going back to 2019 when we.
Can I get that by date, Cameron?
Oh, that's a good question.
What I'm interested in is what it's trading lately.
Yeah, you can sort it on some things. Let me see if you can sort it on date. I think you can. Scroll down. Let me share my screen again for people. Can you see that? So yeah, that's the top of the page.
Yep.
So that's the chart at the moment. Tony, by the way, Tony doesn't agree with this number, Marcus. You know, it says 26, 29%, which is per annum. Tony says it's more like 20. So that's why he's still saying he thinks the CAGR calculations that they're doing is wrong. Mm-hmm. But he hasn't had a chance yet to do the exports and drill down on all the numbers. So here's the list of transactions. Oops. Yeah, you can't really sort on date, can you? I have asked them about this before, if we could sort on date.
Date of what? Date of buy or
date of buy? Date of buy. You guys used to put up what you're buying and when, but I haven't seen that lately.
No. I mean, you can see it if you click on the security. You can see the buy and sell dates. It's on those arrows.
Drill down.
You can see it there.
Yeah.
That was the only way I could see any dates.
Yeah, you can't really sort or move or change it, can you? Yeah, we did used to do that. We used to advise people. I don't know when I stopped doing that. Probably when I figured it was all live. But
and you used to say, I'm going to do this in 24 hours time or something.
Well, I think Tony used to do that for his own portfolio.
Yep, right.
And he doesn't do that anymore. But what we when we got the AFSL, we had to implement certain policies and procedures and that kind of stuff about transparency and reporting and disclosure.
Yep.
So what we do is we have a live website. There's a link to it down the bottom, I think, down here in our toolbar. If you go to the disclosure page, it has our trading policy. So that's, if we own it, we'll declare it. If we don't already own it but intend to buy it, we'll wait for 24 hours after we publish the stock of the week. So it's just if we do it as a stock of the week and we intend to buy it, we'll wait for 24 hours.
Yeah.
We publish the stocks of the week, and then if we're going to buy them, we'll buy them 24 hours later. We normally never get around to that. And then you can always see a list down here of everything that we currently own, both in our personal portfolios. This is individually and then combined, the combined list here.
Yep.
Yeah.
But if we wanted to replicate or know how the portfolio, QAV portfolio is made up, it's difficult to find that, except for searching right through all those dates.
Yeah, like I'll try and come up with a better way of showing what we currently hold. I'm sort of relying on Navexa to give me something that I could just put on the website. I mean, I could just, I don't know, I could let you guys know if we're replacing stuff. Although, to be honest, like I don't think we've done a lot. Let me.
Well, I think you used to do that like over a year ago before the financial services license thing. You're right. You used to go, we're buying this, we bought this today, we've sold that, blah, blah, blah.
Yeah,
it doesn't seem to be around anymore.
Yeah, well, we had to stop doing all of that when we didn't have an AFSL. And then when we got one, we implemented a new sort of policy and procedure.
Yep.
But let me just share this screen again.
Isn't it on the bottom of the newsletter anyway, or your current stocks?
Well, that's the thing I showed you, what Tony and I own. It's not the QAV portfolio, which is different. But you can look here. So this is live inside of Nivexa, portfolio. I can't even sort it.
How does one get in there?
Oh, you can't. That's our, this is my login to Nivexa.
Cameron's brain, and you don't want to go in there.
No, trust me, you really do not want to go in there. But if I can go into reports, I'll look at all trades and, okay, so sort by date. All right. The last trade that we did was early March. Oh no, that was cash. Move some cash around.
BOL?
Yeah, early March. There you go. We bought BOL, sold ANZ. Before that, February we did a couple of trades in February.
To get that screen would be interesting to me. I don't know if it's interesting to anyone else, but it'd be interesting to me.
Yeah.
Maybe you could just
it's a group of one.
They don't give me I mean, I'd be happy to share this on the website. The whole purpose of the portfolio is to make it transparent so people can see it. They just haven't given me the tools to do that yet, but I can keep badgering them to do that.
Yeah, it's
otherwise,
just that if I'm buying things that you're not buying, or you're buying things I'm not buying, I would just think to myself, why is that?
Yeah, well, there could be a couple of good reasons. Number one, it could be a difference of ADT because we don't.
Could be a lot of reasons. Yeah.
Yeah,
it would just be interesting to look at it and go, well, let me think about that.
Yeah. Yeah, Luke asked if I can export. I mean, I can, but how often? Like, do you want me to do that? And what do I do with it when I export it and all that kind of
I guess
thing?
the question is if we can export it, maybe.
Well, no, you can't. I mean, they can't.
The principle would be the more automated, the better, wouldn't it?
Yeah, unless I gave you gave you access to our Nivexa portfolio, but it's probably not the best idea.
People like Markets Padley sort of they publish daily a sort of list of what they're holding and when they bought it and what the latest, are they in the red or ahead? And then they, on the last 10 trades, they publish a more detailed assessment of how the last 10 trades have gone. So they wait for 10 trades to come through, Cameron. So this is your, when do you do it? So you sort of got a continuous running total of what you've got inside the portfolio, and then you take off 10 at a time. As you fill up 10, then you run some analysis. They just publish it on a spreadsheet. That's how. So I'm simply mentioning that as one way that other people do this, overcome this issue, because I think it is a bit of an issue. I agree with David. It's a bit you have to sort of really dig around, or just keep tracking it yourself. So I did notice that.
Yeah, well, look, I'm more than happy to export this once a week or once a month and put it up on the site, or I can get one of our interns to do it. Just tell me what would be useful, and I'll what you want to know, and I'll figure out a way to make it happen.
Just get your people to talk to my people.
Yeah, we'll get them to do lunch, David. They can get back to us.
I'll send you something that some other people do. Okay.
Yeah, sure.
But I'll send it as a direct.
Although, yeah, sure. I mean, in terms of analysis, and we can even do it, like Tony does do the top 3 stocks of the week and stuff. But if you want us to talk about the last 10 stocks and how they've done, we can do that on the show once every now and again. Tell me what you would like to see, and we'll try and make it happen. Ideally, I want to keep pushing Nvexa just to give me the tools to embed this on the website, so I don't have to worry about it. And you guys can just get an update, automatic thing would be great. You know. Yes, Marcus.
I got one more question on a sell trigger. So looking at the Bible, it's talking about bad news or breaches the 3-point trend line. Need to liquidate some of his holdings, has an underlying commodity, and never lose money. Rule number 1. The principle of when to buy is the quality and the value. Yeah, and together that's when we buy in. And then I'm assuming we sort of put it to one side, and if the stock price goes up, obviously it's going to get above its ratio of 7 times the operating cash flow per share, etc. Has Tony looked at, and it's not in the Bible, but if the quality score drops and you know, falls off a cliff, but it hasn't triggered one of the other, you know, A, B, C, D, E sell points, would he look at it and sell out? Because I'm thinking about your example of a share price that, you know, rises like a rocket and, you know, has tremendous growth, and it's difficult to draw that 3-point sell line. And we don't want it to plummet like a meteor to go as a rule 1 sell. But I'm thinking if the quality score, you know, we firmly believe in it, it should be a leading indicator even before sentiment. And so when the new latest financial results come out, you know, would Tony in the past, has he ever looked at it and said, well, you know, when you bought in, the quality score was fantastic. It was 0.4 or whatever the number was, but now it's, you know, it's flatlining or negative. I'm not sure if that's positive. It could be. Is there any thought about whether that's, you know, a rule F and you're getting out at the high point?
Well, how would,
the question is?
Yeah, but how would you know that the quality score has dropped?
Well, it's relative to your buy-in point, right? I mean, you bought in and the quality was there and you're below the 7 times operating. They're sort of some broad brushes I use when I do my filters.
Yeah, well, the quality score is determined by looking at how much cash they're generating, what the prop path is, all those things. But how would you know that that's changed until the next financial report comes out?
Well, no, but that's what I'm saying. When the next financial results come out, would you consider that, you know, because the stock might have gone up in your example 100%. Yeah. And if you're using the 3-point trend line or one of those other sell rules as a reason to get out, it may not trigger one of those. And I guess, you know, I'm continuously looking at the right time to get out. You're trying to get out before the sentiment catches up and it's, you know, it's back to a negligible gain.
Yeah.
Because it's not a quality stock by definition, right? If you've bought in and it's above the 0.1 score, that's your reason to buy in. The reverse logic is if you've redone that, I guess that's the point. It's the reporting season. The latest quality score is a 0.001. So it's no longer a quality stock. You're still above your buy price. So you've made an unrealized capital gain. Do you look at the current quality score once you've refreshed the model to say, okay, now I'm getting out?
Well, there's a couple of different things in there. The quality score and the QAV score are different things. So the QAV score, you know, will be determined, is determined by combination of the price and the future IV.
Yep.
Right? So you can have a high quality score and a low QAV score, and vice versa. You can have a low quality score and a high QAV score. They're related but different metrics, and we expect that as a share price goes up, the QAV score will come down, and that's a good thing. You know, we want that to happen. because it means that price has gone up since we bought it. Tony did do an experiment in the last 12 months where he did it on paper. Oh, no, I think he was doing it with real money, actually. He took a percentage of the portfolio where he was waiting if the QAV score dropped down to, I think it was 0.05 or something, he would sell it and replace it with something at the top of the list. He ran that as sort of a rebalancing experiment for, I think, 6 months or so. And it didn't go well. So he said, yeah, I'm not doing that anymore. It's a waste of time. But yeah, no, I can ask him about that. But I think his response will be that if it was a good quality company and it was generating a lot of cash and we bought it when it was undervalued and the price has gone up and it's done very well for us, but then it comes out with the next report and its report is bad and therefore it's no longer a good quality company, that's going to be reflected in the market. If the market doesn't think it's it's good anymore, share price is going to come down and it'll hit a 3-point trend line and we'll sell it. He would use the market sentiment as guidance as to how the market is assessing the latest financials that came out. Basically, Tony uses sentiment and consensus estimates as a way of not having to read and understand every financial report and the intricacies of every business and every industry sector and all of that kind of stuff. He relies on analysts and just the market generally to interpret those things on his behalf, and he's guided by the sentiment of the marketplace. I think that's the cool thing about using the 3-point trend line, is we're cheating. We're like Michael J. Fox in Back to the Future on our skateboard, grabbing onto the back of the ute and letting it take us along. We don't have to do all of that work. We're letting the market do that work for us, tell us what the report really means about the future prospects of the business. And the point being that if the share price doesn't hit the sell line, then the market is still supporting the business. The market still thinks, the analysts, the professionals still think it's got some upside.
At the end of the day, the share price is what the market's willing to pay for the stock, and that's all that matters, regardless of what the numbers say. I mean,
to a point.
Well, yeah, but
it's a big part of it, right? Yeah. At the end of the day, we are in a market, and the price gets determined by the market, and we have to listen to the market. And, treat it with respect. You could Will Smith it, go up and slap it in the face if you don't like something it says, but I don't know that's going to get you very far at the end of the day. Yes, Evan Carambas.
Can I ask a question, please? Cam, you mentioned that you're going to try and get us off Facebook and centralise somewhere. I don't know whether I'm the only one, but I get a little bit bamboozled by emails and Facebook messages, and then there's a podcast, and there's sort of information comes from all directions, and it's not centralised in the one place, or maybe it is and I'm just not getting it. But as you know, I tried logging on to the website the other day and I changed my password and they kicked me out of the podcast, and all these sort of things happen. So can you just explain what you're trying to do with the website and how we're going to centralize things so they're a bit more accessible?
I don't know, Evan. You're acting like I have a plan. I don't have a plan. I'm making this shit up as I go along, Evan. Come on, man.
That's what I thought.
I've never done this before. I'm a podcaster. I just turn on a microphone and talk about history. Well, look, the idea of getting off Facebook is, as I think I said in my post, number one, I don't like Facebook. I don't like having to open it during the day to check messages from QAV Club subscribers, because then I get 50 people message me, and I get all this stuff, and it's just too much noise that I'd rather not have to worry about. Secondly, I don't trust Facebook. not to just cut me off for something I say about Ukraine or Russia or Putin. I have been blocked from Facebook before. On several occasions, I've been banned because of not QAV related stuff, but I do a lot of shows about a lot of stuff, news shows, political shows, history shows. The last time I got blocked from Facebook was because on my Cold War podcast, we were doing a series on Yugoslavia, and I posted a photo of Adolf Hitler standing in front of the marble marker of where the guy who shot Archduke Franz Ferdinand started World War I. And I was like, here's a picture of Hitler looking at this thing where this Serbian shot the Archduke. Facebook banned me from Facebook for 2 weeks because I posted a photo of Hitler. It's like, I'm doing a show on the Cold War and we were talking about Yugoslavia and Tito and this and anyway, so I get banned from Facebook for innocuous stuff like that. So I don't trust Facebook and I want to get away from Facebook. So the idea was to replace, so we have like a messaging service, but on our website, so we control it, can't get shut down, etc. And it doesn't have all the other noise and bells and whistles and all of that kind of stuff and advertising and all that kind of junk. So that was the idea behind that. And, that will be central in terms of, we'll put the podcast links in there as I do on Facebook when a new episode goes out, and the newsletter, I can put a link to the newsletter announcements and all that kind of stuff. And then somebody suggested, well, Slack is a better way of doing this because that's what the cool kids use today is Slack as a messaging service, and just pops up on your phone and your computer and that kind of stuff. So I thought we'd try that out and see if people like that. It could be either or it could be both. We'll publish it both on Slack and on the website social network. We send the emails out because conventional marketing theory is that people don't necessarily remember to listen to the podcast, and you have to remind them with an email in case they forgot to listen to it last week. Not sure if that applies to a highly motivated audience like QAV, but I do it. And I've had early on, I think I missed a week with email and I had people complaining, where's my email? I rely on your email to remind me to listen to the podcast. And I was like, oh shit, guess I better send the email out. Don't want. So I get your point. Yeah, there is a lot of stuff coming at you from a lot of places, but we're trying to make everybody happy by giving them options, I guess. But if you just want to, you can take your name off the email list and off the Facebook group and off the Slack group. If you don't want any of those things, you can unsubscribe.
Then I'll start missing out, right?
Well, it depends on, when we do events, we have to tell you somehow that we're doing an event or something like this or whatever. There's certain things that we don't put in the podcast. I don't know. It's hard. If you have any better ideas for how to run it betterly, then tell me. I'm all ears, man. Because
you're making words up.
Yeah. Like look, as I often say, when we started this thing 3 years ago, it was going to be a podcast once a week. Tony and I get together for a chat, and he'd teach me how to invest, and then it's just turned into this thing that we never really expected it to be, right? It's become a lot bigger and required a lot more work for both of us, particularly me, but a lot more work than he signed up for, which he constantly reminds me. I thought I was just going to jump on the phone to you once a week and answer, talk to you for an hour. I didn't know I'd have to prepare and, be on Facebook and answer emails and never get to take a holiday. I go down to Cape Schanck and you're emailing me 5 times a day. And what do I do about this? And I'm like, oh, poor you. Poor
if I could
rich
make a
white man. Yeah, what?
If I could just make a suggestion, and and I've only just joined this group, I suppose, lately. These sessions are very good. Maybe you can include your 2 stocks of the week, and they can be discussed during this session.
Okay. it's not much to discuss. They just scored well on the checklist. But that's
Well, yeah,
really
but
it.
other people can, you can sort of, why did it score well? How did you come up with that? There might be other opinions, and I know, like I'd sort of look at the charts and say, well, is it trending up? Is it trending down? What are the indicators showing? There's other variables that sort of come into it. I'd sort of, I saw on Facebook that you made a comment that today the QHL had just gone into the buy, or was just declared a buy, and then a few days later you had to declare it a sell.
And then it became a buy again hours later.
Oh, right. Okay. So we had to retract your sell recommendation. Yeah.
No. Once I sold it, I sold it. If it becomes a buy again,
yeah.
it becomes a buy again. I'm out.
And
Yeah, we can talk about that stuff. Sure, I can talk about anything in these sessions. Whatever you want to talk about, we can talk about. Yeah.
Yeah. Well, I sort of struggle a little bit with, especially low value stock. So if you buy something for 15 cents and you set a 10% sell limit, you've only got 1.5 cents to play with. Now that's only 3 pips on that stock, and that could go 5 pips cycle during the day. So you could be buying and selling it 3 times a day if we sort of stick to the 10%. So I tend to sort of switch off the 10% thing until the end of the day, see how it opens the next day, and then make a decision from there. And also have a look at the chart and see what the trend lines are showing. Is it trending up, or is it trending down, or where's it going?
No, I do the same thing, like with QHL. So the way I've alert set up in Stock Doctor, I only get the alert at the end of the day. I don't do intraday alerts. So I'll get an alert at 5 o'clock from Stock Doctor saying such and such is a sell, QHL in this case. I emailed Tony and said, I think we need to sell QHL, and I'm going to replace it with BSL. Got an email back from him this morning saying, yeah, that looks good. And so at 9 o'clock, I sold it. And then at, 1 o'clock, Kane Kelfkins on the group said, it's gone up 5% today. Should I still sell it? I was like, God damn it. But yeah, look, and then Tony has often said with the rule 1 thing, like, do look at the trading range, the average daily trading range. If it's a penny stock, as you say, it could go up and down by 10% multiple times during a day. So in cases like that, maybe give yourself a little bit of flexibility. Don't worry too much about it. But
I think there's been discussion that for those micro value stocks, a 20% sell is a more realistic way to, rather than the 10%. I think that was you guys discussing that at one point, and that
I don't remember. Yeah, but maybe
remember that. But that seemed to make some sense to me at the time. So.
But look, the thing with rule 1 is my position on it is just do it. Like it doesn't matter. Like you have to sell some stuff. It's there, as Tony said on the show this week. It's there for insurance. Does it kick us in the balls occasionally? Yes. Does it matter? No. I mean, like for me, it's just mechanical. I don't even think about it now. If it hits 10%, I just sell it and buy something else. I mean, I don't have to do it very often. It seems to happen to all of us when we're starting our portfolios. So it seems like a lot bigger issue than it really is. But after you've been doing it for 6-12 months, every now and again, you have to rule 1 something, but not very often. And when you do, to me, it's just like brushing my teeth now. Sell, buy something different. I don't even give it a moment's thought. Just get out, buy something else. And if it backfires, it backfires. But it's there as insurance in case it doesn't backfire. In case I wake up one day, I wake up the next morning and within 10 minutes of trading, it's dropped by 20%. That's what I'm trying to avoid, is getting the rug pulled out from underneath me. And that did happen to me. It was some penny stock that I bought and my son Taylor bought and his friend Chris bought, had an average daily trade of 5,000. We were each only buying I think I was buying 1,000. They were buying 500. No, I don't think it was ZGL, Luke. Might have been, but it was something like that. I think it was even worse than ZGL. It was like really small. And it became a sell And by the time I got the sell alert and called Taylor and put my transaction through, the share price had dropped by 25% within an hour. And because you couldn't get out because there was only like 7 people that owned shares and we were 3 of them, I think. And there was no market for the shares. And it was just, the price was just going down. And I was like, oh no, that's why I shouldn't buy small ADT stocks, even though it looked like a really good, like it could have gone up a lot, but it didn't.
You should have bought from your kids and bumped the price up.
Yeah. I think we were sitting on it for like 6 months too, and it didn't go anywhere. And I kept saying to Taylor, yeah, it's one of those ones that'll probably be an acquisition or something, and it'll go through the roof. But the opposite happened. I think the CFO quit or something like that suddenly, and the whole thing tanked. But it's there as insurance, you hope you don't have to do it. You do have to do it. But like Tony said this on a show a while back when people were asking about it. Like for Tony, okay, look, I honestly don't know what Tony's portfolio is worth, but I'm guessing it's probably in the vicinity of 100 mil. That's my guess. Luke says higher. I did some rough numbers a couple of years ago. I said, okay, well, when he got his payout from Shell, what would that have been roughly worth? And he's been investing for 30 years and this sort of return, and I put it into a spreadsheet, and I figured somewhere between, at the time, about 50 to 70 mil, but it's been growing at, average of 20% a year for the last 3 years. So rule of 72 is that it doubles every 3.5 years, a little bit less, at 20%. So his portfolio now should be twice what it was when we started the podcast. So if it was 50 to 70 mil 3 years ago, again, I'm just pulling numbers out of my butt. I really don't know. I've never asked him. He's never volunteered it. I wouldn't insult him by asking him because he just wouldn't tell me, and it would be, he'd tell me to go fuck myself or something, and I don't want to be in that situation. But it just laugh. But when he does, the point is, if he has 20 stocks and they're 100 mil, so 5 mil a stock, his brokerage, I don't know what his brokerage deal is with Bailey's, but his brokerage for a trade is probably more than my entire portfolio. It's more than my trades, individual trades anyway, his brokerage. And he still does
I think
it.
he said 0.4.
Yeah, he has mentioned it on a podcast.
All right. Yeah. Who's a maths whiz or has a calculator handy? What's 0.4 of 5 mil?
20,000.
Okay.
No, or 20 or 200, one or the other.
You're just making shit up now, Marcus. Like,
no. 4 times 5 is 20. So it's.
Hey Siri, what's 0.4% of 5 million?
It's 20,000.
20,000.
20,000.
Good work, Marcus. Should have done that in the first place. So he's dropping 20,000 brokerage every time, and he rule ones things pretty religiously. He doesn't, and he's losing 20 grand every time he does it.
Mm.
So I know it's different because he's richer than sin, but the point is that he does it and doesn't question it. So I don't question it either, but you've got to do what you feel comfortable with.
His annual dividends on stock is that's 5%. Is a couple $100,000.
I hope he doesn't watch this now. He's going to be like, "What? What are you coming up with those numbers for?" Yeah,
It's
not a bad dividend.
If it's 5% on 100 million, it's 5 million.
Well, that's it. Yeah, but I'm just talking about per stock, right?
Oh, per stock. Sorry.
Yep. Yeah. 5% of 5 mil. So.
All right, guys. I should probably
better
wrap this up. We've been going for an hour and a half. Unless there's an urgent question that someone wants to squeeze in. Well, if you have any more questions, feel free to email me, but I'll do another one of these next week. Was it good? Was this useful? Should we keep doing it? You like it?
Thank you, Dan.
Enjoyed it. Thank you.
Well, that's great. Well, thank you all for being club members and supporting the show and doing this. I really appreciate it. So, you know, we're really excited about what QAV is evolving into, which is just a community of really smart, nice people. We're all of the dinners that we do and the Zoom calls, we always have a great time, just a lot of fun. And yeah, so thank you to all of you for being part of that and helping us build this out for everybody.
Thanks.
You're going
Cameron.
to be publishing get-togethers in states, I think, in Facebook going forward. Yeah.
Yeah, so I'm planning on going to Sydney soon as it stops flooding. And we'll do an event there, maybe. Although every time I've tried to do an event in Sydney, the same 3 people turn up. Because Sydney people just don't like going out. Apparently.
They're probably looking to get paid, are they?
Yeah, probably. Yeah. So
when are you coming back to Melbourne? How far away is that? After US or?
No, Tony told me he'll be back down there, he thinks, in the next couple of months. When he goes back down, I'm going to come down and do an event down there. And yeah, and then Perth one of these days. I'm desperate to go to Perth. I haven't been there in 15 years.
Shut the border.
Yeah, exactly. Yeah. And Adelaide and Tassie we want to do as well, but it's just, yeah. I mean, getting Tony to travel anywhere during COVID has been difficult. And
Cameron, I think that's the point about Sydney, is Sydney-siders have not been going out, unlike Queenslanders. You know, we just, you know, we bedded down.
Yeah, that's a good point. Yeah.
It's just, I noticed Marcus Padley did something I couldn't attend 2 weeks ago in Sydney. Very well attended.
Right.
Just drinks at the Oaks.
Right.
Sort of very informal, but that apparently was very well attended. So,
I
mean, you don't want 2,000 people to come to these things, but you do want, you know.
I do, really.
Yeah.
That would be a good problem to have one day. Yeah. All right, everyone. Enjoy the rest of your night. Thank you so much. Take care.
Thank you.